Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, great week, wherever you are and whatever day it is for you. It is a good day here on the podcast, a good Thursday. This is the rare Thursday that we're doing a show. We got Dr. Bharat Sangani with us on the show. He has a ton of experience as a heart specialist, an entrepreneur, investor, and of course in real estate. He's done over $3.7 billion in commercial real estate transactions across multifamily, residential, retail, hospitality, office, and mixed use. So if you guys are here for the wisdom, I'm sure you'll get it on this show. And again, I have to apologize. My daughter she's super, super excited this morning for whatever reason. She's 2. They get excited. But if you hear her in the background, that's just her excitement boiling over. So Dr. Bharat, I am super excited to jump into this. Thanks for having on the show.
Pleasure is all mine.
Absolutely. So I told you before we get on here, we always like starting with stories. We like to hear how people got to where they are. You didn't go too far into it when we were talking before the show. So why don't you take us back to the beginning of your story, specifically in real estate, and tell us how you got started?
So you are correct that most people who are professionals like me, they don't just jump into real estate. Something usually happens. I'm by profession, as you and I both know, I'm a cardiologist, and my main function is being a heart specialist. But I used to work 24 hours a day because heart attacks don't have time. They come anytime. And so believe it or not, a lot of them try to come in the middle of the night.
Interesting. I did not know that.
And if you don't get there to see the patient and fix their problem in 4 hours, they lose that part of the heart. It almost never regenerates.
Oof.
So you have to be there immediately whenever somebody is having a heart attack. So I knew within a very few years of practicing 24/7 that nobody can keep up with that pace. So I had to do something else. So I have a logical story why I got into real estate, and I got a funny story. I'll just start with logical, and if you have time, I can go the interesting, funny part of it. But the logical part is very simple. I knew I cannot survive 24/7. I had to find something else. I'm a Gujarati. That means I'm coming from the western side of India, and most of our community is in business. Business is in my blood. So it was not that difficult for me to start thinking in terms of doing other things. And real estate was quite obvious because that's what our community does.
Yeah, that makes a lot of sense. Being surrounded by a community of people who've already kind of laid the path for you, it makes it almost a second nature, something that's obvious that you're going to be traveling down that road. Because you got that community surrounding you. I'm always, a little bit jealous of people who grew up in business families, and they had that talk that was just kind of in the family, in the background. You always knew business was there. So you knew once you got to that opportunity, you could just start taking the steps.
You want to hear the funny side, or you want to put that for the last?
No, let's hear it. Let's go into that funny side. I like that.
So here I am working. I was the only board certified cardiologist in Gulfport, Mississippi at that time, 1988. And I was working 24/7, as I said that before. My father-in-law visited me from India, and he was a businessman. So he visited, and he was about to retire. And in Gulfport, Mississippi, the weather is very much similar to Bombay. So he said, I'm about to retire. I like this weather. I wouldn't mind moving here. Well, in Indian culture, it doesn't matter whether it is your parents or your wife's parents. our spouse's parents, it's the same thing. We feel like we like extended families. So I said, why don't you just move here then and live with us? And he said, done. So a few weeks later, he comes back and says, I want to come see you. And I'm making this story a little dramatic, okay?
I like it.
But the essence is still the same. It is honest truth. And so a few weeks later, he comes to see me and he says, well, I decided to move, but what am I going to do? So I said, okay, you tell me what you want to do. You're a businessman. I'm not a businessman. So he said, well, I've been going to some of these Indian parties and everybody's saying Indians do well with hotels. So I would like to build a hotel. Well, I had no issues. He was a businessman. He knew what he was doing. So I said, just let me know how much money you need. I will write the check. You build the hotel. So he said, okay, those days you could build a hotel for negligible amount of money. So those days he asked for, I think, $1.6 million. And I was making $1 million a year. So it wasn't a big deal for me. So I said, okay, go for it. So he started building the hotel. I mean, the town's size was 100,000 people. And I had 70,000 patients. So everybody and their brother was somehow connected to me in the town, okay? So anytime he needed something, I would just pick up the phone to a carpenter or cement guy or road guy or whatever it is, and they would show up as soon as I make a phone call. So he got the hotel built. And, Gulfport, probably in January, February, gets slightly colder. And we had
Slightly colder.
started slightly. It doesn't go into teens or anything. It does go into low 40s or high 30s just at night. It's not that bad. I mean, so one day he says, and he started building, he came to this country in probably March, started building in April, May. The hotel was about ready in February. So he calls me again and says, I need to see you. I said, okay. I thought he's coming to tell me he's very happy with the project and he's excited. And so he comes and says, last few days the temperature is dropping too low for me. I can't live in this temperature. I need to go back to India. And I said, what?
Dude, we got this whole hotel right here. Go on.
So here I am. So I called Smita, my wife, and I said, sit down. She said, what happened? I said, your dad is screwing us. Yeah, I don't know. All the money we have is now in this hotel, and he wants to go back to India. So she says, don't say bad things about my dad. I said, I am going to say bad things about your dad. I just didn't tell him that. I'm telling you. She said, what's your problem? So I explained to her the problem. She says, I hear you. You're correct. You don't have time to run the hotel, right? I will run the hotel for you because of him. So she took over the hotel. My father-in-law went back to India. And guess what? I was making $1 million a year, 1988, working 24/7. And Smita took over the hotel. In the first year, after working 2 hours a day, she posted $400,000 net profit. Go figure.
Look at that. 2 hours a day. She's got you beat. I love that. I love that story. Like your wife took the reins. She was like, no, we're not going to, my dad can do what he wants. We're going to let him head out and we're going to take this over. And sounds like it was a great success.
Yes. So then, you are young, you feel like king can do no wrong. I was full of ego and power, and I said, who am I? I am a cardiologist. I'm next to God. I cannot do anything wrong. Let's just go do it. Boom, 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 boom. After 30 years, I've become very humble, a lot more humbler than what it was before. But the success begets success, right? And things just continue to work. More so on the luck side than my expertise.
Well, hey, luck is half of everything, but when it does come our way, we take it. You don't complain when you get luck. What was really interesting about that story is the timeline for construction. Your father-in-law got there in March and you were done in February. That is the shortest timeline I have ever heard for a commercial development.
Yeah, it was a 64-room hotel, and as I told you, everybody and their brother knew me, so there was not a waste of any time. And the weather in Gulfport is always good, conducive to construction, you know?
Yeah, no, that makes a lot of sense. So right before we got on here, we were kind of chatting, and I had asked, what is the asset what's your strategy? What do you like to invest in? You've mentioned hotels, but it sounds like, as you mentioned, you don't really have a specific asset that you go after. You more go after opportunities. So tell us kind of how your trajectory has been and how you've been deciding which investments to invest in since that first hotel.
True, true. Well, as I told you before, every dog has a day. And that's very true in real estate. There are some sectors of real estate are in vogue and they fall down and they eventually come back. Real estate is a cycle, as you know and I know. And the cycles are usually 7 to 10 years. And you need to recognize that fact. And we started with hotel. We recognized that there will be downtimes in it. And then we slowly evolved into shopping centers, then multifamily, then office, then gas station, truck stops, etc., etc. So all these different areas or sectors of real estate, we are heavily invested one time or the other. And by God's grace and good people on the company, we have been able to exit proper times. So when the real estate cycle, everybody wants to get in at 6 o'clock and get out at 12 o'clock, right? That just never happens. We don't profess that we will do that, but we will most likely will get out around 11 o'clock and will probably get in around 4 or 5 o'clock. It still is a good return, and things have worked well so far.
Yeah, absolutely. I mean, timing is everything in real estate. So let's talk about that. Deciding to sell a property for me is a huge decision, especially if it's something that I've been putting a lot of time and effort into. And you get to the point where you realize that you've kind of stabilized it and it has reached its value and you probably should sell it. But I drag my feet and I'm just like, I just want to hold on to it. I just want to hold on to it. How do you get to the point where you realize now is the time to sell and you pull the trigger?
So I'm going to give you this secret, okay? Don't give it to anybody except your listeners.
It's just
okay?
us here.
So this is a real secret. So there is one, again, I'm a storyteller. So there will be one logical explanation and one is the story. The story is very simple. Listen, always follow the money. That means always follow the bank. When the bank starts putting constraints about lending, the first time you recognize that, you need to sell. Because now you know the herd is going to go away from this process. So I have a bunch of friends working in the bank, and I just ask them, I don't want any other favor from you, except just tell me which segment of real estate you are going to slow down lending. That's all I need to know.
Yeah.
And then I sell just before they start stopping, I get out of it. And same thing I do on the reverse side. I say, where are you lending today? Freely. And you say, well, we lend freely in the hotel. Boom. That's the time to get into it. So that's a kind of a funny way to look at it, but it has worked most of the times. Now, the logical way to look at it is very simple. Most of us who have been in the business for a while, we understand when the market continues to go up and the rents continue to go up, that at some point there is, we call it rate of return. And we say, okay, we are now getting $10 on our $100 investment every year, right? Then we need to say, okay, is there any other investment which can also produce, if I sold this asset and I got 10 extra dollars, whatever I'll invest, if it's going to produce 10% return, I should get out of this. So as long as you can replace that income with some other investment, less riskier, this is a very important word, less riskier, then I think you should do it. You should exit out. So these are the two principles we have followed, and by and large, we've been successful. Now we've been caught into real estate cycles. We couldn't exit out at times. Most of the times we've been lucky, but when we have missed the cycle, we just stay another 5 to 7 years and wait for the next cycle.
Yep.
But the rules are the same.
Yep. Yeah, and so many people have echoed that same sentiment. Is if you're in a down cycle, if you're in a period where for whatever your specific asset, if it's a hotel, those are not selling for good cap rates, then just hold on. If you can ride out the wave, if you can ride out that cycle, it'll come back up and you can exit on the next one. That I really like that you said follow the bank though. Nobody has, we've done 600 plus episodes. Nobody said that, but it makes a lot of sense. You just talk to the bankers and, when they say, we're not going to lend on multifamily anymore. There's too much of it out there. We're not doing that. We're not underwriting those loans. You're like, well, now's the time not to do multifamily. We'll turn our attention to whatever else you guys are lending on.
And sell whatever you have, immediately sell.
Yeah.
Because nobody's going to be able to buy for a long period of time after that,
Yeah, that makes a lot of sense. So let's just talk about your favorites. You've done so many types of deals. You've done, multifamily, residential, retail, hospitality, office, mixed use. So what of those, let's just say, in the perfect world, they're all on the up and up. They're all coming up. They're great assets. Which of those assets are your favorite to buy and hold on to?
I mean, you're giving me a hypothetical situation that almost never exists.
True.
But let's just assume that is the fact. I think it also depends on what is your risk tolerance, risk appetite, and but keep everything equal. I would still think multifamily will win the race for various many reasons.
Yeah, multifamily is a fan favorite across, many investors out there. That's one of the ones that I just have never invested in, surprisingly. I started out with the intent
all you have to do is spend a few hours with me. Even a monkey can do it, so no worries. Come see me.
That's good to know. That's good to know. I don't need to be a heart surgeon to figure out multifamily. All right, so let's talk about the next couple of years for us. We're in a very odd time in real estate. We got interest rates that are still pretty high. What do you see happening, and which asset class do you see? What are your bankers telling you that is kind of the hot asset for now?
That's a very good question. And listen, these are the times the novices, the people who don't have any experience, the inexperienced people will fall prey. They will lose money. These are very uncertain times. We have a leader who is trying to do great things for the country, but is unpredictable. And what is going to happen tomorrow is not known to anybody, probably including him. Mm-hmm. So why do I want to take unnecessary risk? So the rule that I put in place, or our company has put in place, is follow the money. That means you must have a cash flow. Today is not the day you should invest with a future in mind, because nobody knows the future. Now, I'm not talking about AI, I'm not talking about the stuff that I don't understand, or Bitcoins and stuff like that. I'm talking about pure real estate. In those areas, wherever you can invest today and start getting return tomorrow, that's the investment you want to do. If somebody says invest today, we'll develop this, 5 years later is going to make a lot of money, you tell that guy, bless you, you really need to do that deal because you believe in it. I just don't have the guts, ability, luck, desire to do this deal. So I'm not criticizing for who are doing that. I'm just not the guy who has that kind of risk tolerance to do it.
Yep, 100%. And I'm right there with you. If it doesn't have cash flow today, if I'm not closing and then the next month I see a check come into the bank, then it is not worth investing in. It doesn't matter what the appreciation rate is. It could be double-digit growth for that economy. If it's not making money, I'm not interested. All right. Well, Dr. Bharat, we have rounded down the time. It's already 20 minutes, so we got to push ourselves into the quick question round. Are you ready?
Let's do it.
Let's do it. It starts with education. It could be any form. It could be a book you've read, a conference you've gone to, a mentorship program you've been a part of, a movie you've seen, whatever. But I need 2 recommendations, one for general life wisdom and then one for real estate.
So the general life wisdom, I would definitely say the book by Dale Carnegie, How to Win Friends and Influence People. Nothing has affected me more than that book in my entire life. And for the business purpose, the second part you said, I would let you pick one of the 2 books that I admire. One will explain to you what real estate is and how you can understand real estate. And that is, the name of the book is What Every Real Estate Investor Needs to Know About Cash Flow. And that is written by Frank Gallinelli. And the second one, now you understand IRR, you understand NOI, you understand cap rate. This is the basic, this is the lingo of real estate that teaches you very nicely. And then once you understand the lingo, then you say, okay, where do I invest? Then it's called The ABCs of Real Estate Investing. And that is written by Ken McElroy. And I think those 2 books, I think would be a good one for people who are getting their feet wet in real estate.
Nice. Nobody's recommended that the first real estate book you mentioned, What Everybody Needs to Know About Cash Flow. That's a good recommendation there. All right, I'm going to move us on. This is the next question, and it's for your younger self. So let's go back to the Bharat who was, his father-in-law just came into the room, and he was saying, I'm tired of America. I'm going back to India. Go back to him, look him in the eye, give him one piece of advice moving forward.
I think people like us who are professional must think about, do I have time? Number one. Number 2, to be an entrepreneur. Number 2, do I have the money? The minor capital doesn't work. Real estate is no joke. You must have significant amount of capital. And number 3, do you have expertise in whatever you're going to do? And most of us don't. That's why you need a mentor. So these 3 things I would have told myself. It just worked out for me, like we discussed, because of the lucky situation I was in. And probably my wife's luck played a big role in making me successful, whatever little success I have. But these are the 3 things I would go after every time I wake up in the morning.
Time, money, and expertise. That's a good trifecta for success right there. I love it. All right, next question is about the U.S. It is a big place. There's a ton of opportunity out there. Give me the single metro you're most excited about investing in today.
It goes by sector. So if you are in multifamily, I would still say Florida would be my preference to invest in today.
Hey guys, quick break from the show. If you've listened to this podcast before, you know we are always talking about how important it is to have the right mentors and partners in real estate, which is exactly why I've opened up the Real Estate Investing Club online community. It's a place for active investors to learn, collaborate, and get real deals done together. And right now, it is 100% free to join. We host weekly calls where we review deals, talk strategy, and share tactics. Just click the link in the description below and come join us. Okay, Florida, interesting. I've heard a lot. I mostly look at self-storage, and they're just so overbuilt down there. It's crazy. And I just, I don't know.
The deal about Florida for multifamily is that there is still an inflow, right? People are still constantly coming in. And if you look at it now, an average age to buy a home is 40.
Oh, wow, that's young.
Yes. So people who are up to 40 years old, they have no place to go except multifamily. And because of the weather and because of the influx, that particular situation is going to be like that for a while. That's why we love Florida.
Oh, I misunderstood that. So you said the average age of a first-time home buyer is 40 years old.
Yes.
Wow, that's old. That's crazy.
Very true. It has moved because the home prices have gone up since COVID, right? So people can't afford it. The interest rates have gone up, like you mentioned when we started. Home prices have gone up. So now people can't afford it.
Yeah, that makes sense. It makes you wonder because, those people there's going to be a good subset of them who, they don't want to rent and they want to buy. And so those people are all going to move to a market that has similar vibe to Florida, but the prices are lower. So I'm curious if there's specific metros in Mississippi, Arkansas, around the Gulf who still have nice weather, but the home prices are really low if they're experiencing a huge influx. I don't know myself, but interesting idea.
There is some, but again, we Americans, we all love to enjoy, have fun. That's why we don't like small towns as much as we like larger cities. So larger cities are always going to be in the boom, unless the economy is tremendously depressed. And that's what is happening right now. Look at New York, look at COVID, everything was down. But look, everything today, Miami, New York, LA, even San Francisco. Just yesterday, you probably heard it, Blackstone bought the Four Seasons there.
And, wow.
And that's a big commitment on their part for that city who was really going downhill for a while.
Interesting. All right, moving us on to the next one. This is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So what is your favorite way to generate leads and find new deals?
Listen, we've been in business more than 3 decades. So number one way is just being in the business, do what you said you would do, and the deals come to you. People know that if they transacted with Encore, we will close the deal. Yep. The second way to do that, which has worked very well for us, is in the past few years, we started doing co-GP partnership. So we have gone and people who have been in this business for a decade or more, but there is my alter ego 30 years ago, where I had all the energy, I had all the power, I had all the hardworking attitude, I just didn't have enough money. So that's where we would love to partner with those people, let them do the running, and we'll provide them equity. We provide them a commitment of $250 million that they can use over 5 years. And that's how they find the deal. We fund them. And it's a co-GP structure. Both parties make money.
I love it. Yeah, there's a time and a place. There's a season to every part of life. And when you've got the gusto, when you got the young energy, then you're out there, you're scrounging, you're scraping, getting those deals done. And then if you've made it through a successful career, you can be the co-GP, put your money to use with those the people that still got the energy and out there on the streets. I love it. All right. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something's going to go wrong. And that's when we get to learn a lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
Again, it goes back to what you just said. If somebody says I've done 100 deals and not a single deal has gone sour on me, either he hasn't done 100 deals or he's lying. It just doesn't happen. You must be very fortunate not to have a bad deal, right?
Luck is truly on your side that way.
Yeah, exactly. So deals go sour. I think first you must have enough conviction why you did the deal. So don't get into the deal till you are 100% convinced that this is what you want to do. My dad used to say, son, measure twice and cut once. So don't get into the deal unless you are fully convinced. And once you're convinced, be married to it. There's no definition of divorce in that. Then you live with it. Unless the circumstances change or facts change, you need to stay on path. And you should have enough capital so when the downturn comes, you just survive. And when the upturn comes, you exit out.
Yep. Yeah, that last piece there, that's definitely the lesson that I've learned too many times. I should have learned it the first time and just kept stuck with it, but is to have enough capital every time you get into a deal. Even if it looks perfect, things are going to go wrong. They're going to go wrong. It just happens. And so you need to have that backup with capital in order to fix those problems, because in real estate, money does really solve pretty much every problem. And so you need to have that capital available. Awesome. All right. And then on the obverse, sometimes things go right and they just, you walk off into the sunset with a deal and it kind of sticks out in your mind as your favorite. So let's go to your highlight reel. What is a deal that sticks out in your mind as something that you really enjoyed? Take us to that one and tell us how it went.
I mean, most of the deals that we have done, we have done with a clear understanding and eyes wide open. The best deal I can think of was 3 days before the subprime crisis hit on 2007. That was my largest deal at that time. It was a mid nine-figure number. It was 3 days before the subprime crisis hit. We were dealing with one of the large wirehouses, and they called me. That's exactly the time the bankruptcy of Solomon happened, and they called me and said, you know, we were going to get funding of about $300 million in 2007 from GE Capital, but they just pulled the plug. They are not going to fund this. So we have a problem about closing your deal. So I told them, if I have read the agreement right, I don't think we have a problem. You have a problem because we don't have financing contingency. So Gab, I'm telling you, they wrote a check of mid nine-figure number without any debt. And that was probably one of the best deals I did. 3 days before subprime crisis hit, nobody had money 3 days later, and I was sitting on nine-figure cash. And that's when all these new divisions were started and the company grew.
Nice. And that's one of the times when, Lady Luck is on your side and you just take it with you and keep riding on. All right. And that leads us to the second to last question. This is a new question that we've been asking just because I'm a huge fan of AI. I like implementing it in my businesses as many places as I can responsibly do it. So I always like to ask people coming on here, is there a way that you've been implementing AI in your business that you feel has affected the bottom line?
Whether we agree or don't agree, the AI has crept into our lives. We haven't done anything that I could say is dramatic and it has changed the bottom line yet, but it will be foolish to think that AI is a fad and it's going to go away. I think it is here to stay and we will have to embrace it. And if we don't embrace it and if we don't change with time, I think the outcome may not be good for us.
Yeah. I mean, I personally, I'm a huge fan, especially on the research side, on due diligence, underwriting, that kind of stuff. It is, makes everything so much easier. Contract review. We just did a cell tower lease on one of our RV parks. I've never looked at a cell tower lease before. And so this came along, I spit it into AI. I asked it, what should I know about this lease? And it spit out a comprehensive analysis that kind of gave me an overview. So I was ready for the conversation on having this negotiation on a lease type that I had never seen before. So yeah, I'm a huge fan. And you're right, it is here to stay. So I'm going to move us on to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
So the best way to see and understand how and what I think about life in general, real estate, other things, is to go to website www.bharatsangani.com. So that's my name. And that's where you will find ways to connect with me. And there is a mentorship program. If somebody wants to join that program, this is my time to give it back to the society. Society has given a lot to me, as you probably don't know, but I came to this country with $10.45 in my pocket. For somebody with that kind of a huge high net worth to get here where we are today with at peak of our thing, we had 4,000 employees. You said we have a multi-billion-dollar assets that we own and control. So God has been very kind to me and society has made me who I am. So if you go to www.bharatsangani.com, there are ways I would return the favor to everybody who who can use my experiences. I'm not that smart. I just have a lot of experiences.
Well, I'm sure that stuff didn't come without a pinch of hard work. You definitely put in the hard work, and that's what matters there. So I appreciate that, and I will go ahead and put that link in the show notes. So if you guys want to reach out, all you got to do is click the little more in the description. It's going to pull down that full description, and in there you can find Dr. Bharat's links. All right, Doctor, thank you very much for coming on the show. It's been an absolute pleasure.
Pleasure is all mine, as I said before. Thank you very much.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.